Hey everyone, John here from School of Trade. Today we're going to be taking a look at a range trade here on the euro. The euro started off with an attempt to get moving here, but then it failed, and since then we really have been having a hard time here getting through anything, really. So the stop is going to go above the high of day because I don't want to see that broken, and the target is going to be the low of day right down here, and we're going to put all in, all out there. Now, the reason why I'm getting in up here at 587 is primarily because that's the highs of the range, and we've had a ton of just confirmation of that area. Not only did we have these double tests back here, they came back, they tested it again, that failed, tested there. So if it comes back to that area, I'm definitely willing to sell it, knowing that at least I know that if it goes in my direction, I should be able to get at least a scalp, if not a little bit more to cycle back down to the range lows. You can see a lot of other people followed that same mentality. So we've got another double top that formed off the highs here, and we turn back down. We've got 4 contracts in at 587, mainly because the risk is going to be back above the high a day at 599, and that's 11, 12 ticks back up to the upside that I really don't want to go much higher than that. Now, from our entry to our target area back down to the low a day is 21 ticks. So our risk reward is excellent on this setup, and getting in right at the highs of the range is exactly where you want to be looking to get into. We always know, we always say this in ranges, right? Buy low, sell high. That's exactly what I'm doing. Selling high, looking to buy low. It's just in this case, the buy is my profit target. So the low of the day is at 566. I'm never a huge fan of putting a price right on a level like that, so I'm going to go one ahead of it at 67, and that should give me enough room to get down. It's still a 20-tick target, so more than enough room for the trade to work out, but just a slight adjustment there, just in case it wants to go to an exact double bottom and then not fill me, right? I don't want that to happen going all the way in my direction. So beautiful setup so far. We had to wait for this one for a little while to come back and get us at 587, but now that we're in, it's just a waiting game to see if this wants to push right back down to the lows. If we see some weakness down here, if it wants to come back, it might not be a bad idea to get out at break even because they could break higher. But right now we know that at least we could grab a scalp out of it if we wanted to, and that's really why we wanted the trade, knowing that there's a good chance that it continues down, but if it doesn't, we can still get the scalp out of it. So we'll give it a little bit of time here, see if we can push down to our target at 567. All right, we're pushing into an additional limit order here at 10,579, and the reason I like this is we have a nice little wedge formation that broke down. They're coming back to retest it. The bias is definitely down. We are looking very much to the downside, so if it comes back and it retests this channel, I'll sell one more. I don't want to go any farther than that. My stop is going to go to break even now because I don't want it to come back, especially since I'm looking to sell here. So the risk is off the table. The only one that would have any risk is this one if it fills us at 579. And then once that does, we can bump that to a 5-tick or 5 contract stop, and we'll look to just ride out a little bit of extra on the move down for that extra little push back down to that 567 area. So just a quick little update here. Nice little wedge formation, very, very slow today. Not a huge surprise, right? It's the day back after a long, long holiday weekend, Thanksgiving last week. Everyone's just kind of stumbling into work today, right? That's kind of what the mentality is, and it's definitely reflected. We're seeing that slow down so far. So if it wants to come back and fill me at 579, I'll add another one there. Still looking at 567 for everything. All right, pushing down into our target here, 1 tick away from our target. So because of that, I want to make sure that I lock out any excess risk, especially since we're 1 tick away. So our average in location is 585. So that means that if price comes back to this area, based on the entry that we had here at 579 and the 4 that we took up here, this would be the break-even point slightly ahead of it at 585. We would make a little bit on the trade. So I'm going to lock my stop in there at 585. I want to take all the risk off, especially since we've hit the target. We just haven't filled it. Now, normally this is a situation where you might consider getting a little bit aggressive and saying it did what it's supposed to do, I'm just going to close the trade. But you have to understand that today is a very, very, very slow day, and it could easily bump all over the place before coming back down and giving you the fill at 567. So if we get a strong bullish reactionary candle, and it's pushing off of our target and it looks like it's just not going to come back, then I'll close it a little bit early. But given the type of day that it is and how slow low it's been. I'm willing to give it the benefit of the doubt and take a little bit of risk thing in the sense that I would be giving back some profit and say that I want to see this actually prove to me that they don't want to fill me at 567. Aggressive folks, you've already taken your profit. It hit your target, didn't fill it, just close it, you're good enough. I'm going to give it a little bit more time here and see if it wants to fill me at 567. If it can, awesome. If it can't, then we'll close it early on a bull candle signal telling us to get out of the trade. We are low. This is where we want to be buying. So if we get a signal to be buying, we need to get out of our shorts and look the other direction. So give it a little bit more time here, see if it wants to come back to 567 and give us our fill. All right, and that's an excellent example of exactly what I was talking about. This type of day loves to whip all over the place. You see it came all the way back up to that prior candle and then shot straight down and got the target filled. Let me cancel the stop here. So that's what I wanted to avoid. I don't want to take early profit if I don't have to, and there wasn't really a signal to tell me to get out. We have nice bearish pressure here. Other than price kind of retracing in on itself, there's absolutely no reason to be getting out early. Now, again, aggressive folks, you just hit the close button. You're out. It did what it's supposed to do, didn't fill me, good enough, fine, close. But for me, I'm a little bit more of a stickler when it comes to that. I need an opposing signal if I'm going to be getting out early, and there just wasn't one. And that allowed us to stay in, got that drag down, and got that final target at the lows. That little addition there at 579, from that 579 to the target area down here is an additional 12 ticks. So overall, we had 80 ticks on the first one, 12 more on the second one. That's 92 ticks total at $12.50 a tick. It's $11.50, $1,150 on the trade. Beautiful move down, range high to range low. Now we need to start looking to potentially buy and ride this right back up again. So that's going to do it for the trade. If you have any questions about it, feel free to shoot an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.